Are you afraid to talk to a lender, thinking that you're not going to qualify for the loan? Well, let's talk about what the debt to income ratio is, because it's the tool that the lender uses to qualify you for a loan. So you can run this number yourself, you can check it out, and it'll give you a general idea of what your debt to income ratio is. It's a part of taking control of your financial life, but it also gives you an idea of where you're at and what steps you can be doing to get that debt to income ratio down if it's a bit high. So that's what we're going to talk about in today's video, so stay tuned. Hey, Laura Gallant here with Mountain Prairie Living, empowered by ERA Shields, and welcome to my channel where I answer questions about the home buying and selling process, talk about Colorado Springs because it's really beautiful here, and just the process of buying and selling a house. So if you're learning about the process, I'm so glad you're here. Subscribe to the channel. In today's video, we're going to talk about the debt to income ratio and how is it calculated, so that you can run the number really quickly and see generally where you're at before you speak to a lender. So let's get into it. So it's not that difficult. It's essentially your income, your total gross income, not your net income, which is what comes on your paycheck, but your gross income divided by your debt. That's your minimum monthly payments every month on the debt that you have outstanding. So it's not difficult to calculate. You know what you make per month, possibly, because you might be on a commission situation, so it might vary for you, but get a general idea over the last 3 months what you've been grossing on your income. Take that number and divide it by the total debt payments that you make per month. So let's break it down to just round numbers. Say you make $6,000 gross a month, and the total of all of your debt, that's your house payment or your rent, your car payments, your credit card debt, any installment loans that you have, anything that you have outstanding, those minimum payments add up to $2,000 a month. So you divide them into each other, and it's a 33% debt to income ratio. Now, the higher the debt to income ratio, probably likely that you may not qualify for certain loan programs. Now, there are different loan programs and they all have different caps. If you have really good credit score, which I'm speaking about 750 to 850, that debt to income ratio for a lender may push up to about 50%. But I would say a high side of most lenders is about 47% or lower. So do a calculation, figure out what you've got, and then look at your budget and see which one of those debts should I sock down first? Which one should I start to focus on to bring that debt down? Or can I make a decision to sell something to get rid of that debt, bring more income back into my household to provide more opportunity for savings and to lower that debt to income ratio? There was a situation, I had a home buyer that was able, they had some extra cash from the house that they sold. So rather than putting all of that cash as the down payment, they took the cash, they paid their car loan way down, they refinanced it to a lower debt and a lower car payment, therefore a lower debt to income ratio, and they were able to qualify for a home loan. So sometimes it takes a little bit of creative financing with what savings you have and what debt you have, but understanding how to calculate your debt to income ratio will give you a little bit of sigh of relief when you go to approach a lender with asking if you're qualified for a certain loan program. Now remember, each loan program is different, but I hope this information is of value to you. If it is, give it a thumbs up and subscribe to the channel where you'll learn more about the home buying and selling process. If you'd like to learn more about how to put together a savings account or ways to save, then check out this video next. I'm so glad you were here. Thanks so much for watching, and I'll see you on the next video.